Hey everyone, welcome back. Today we're doing a deep dive on Nike's Q2 2025 earnings. The ones that just came out and got everyone talking.
Yeah, a lot to unpack there.
Our mission today is to figure out if this iconic brand, despite its stock kind of, slumping a bit, could actually be a hidden gem for savvy investors like you.
Yeah, it's a great question because Nike stock has definitely taken a hit this year. We're looking at a 29.2% drop year to date as of December 19th, 2024. And the Q2 report itself is a bit of a mixed bag, declining revenues, but with some, interesting details underneath.
Okay, so not exactly a slam dunk out of the gate.
Yeah.
What's the big picture takeaway from these earnings? What does it tell us about where Nike is at right now?
Well, the headline is a bit of a reality check. Nike's Q2 revenue came in at $12.4 billion, which is an 8% drop compared to the same period last year. And their earnings per share also took a hit, down 24% to land at $0.78. Not exactly the kind of numbers that get investors, doing victory laps.
Yeah, definitely not the just do it energy we're used to seeing from Nike. But you mentioned some intriguing details. Is there anything in these numbers that suggests this dip might be a buying opportunity?
Yeah.
Especially, for someone like a young investor with a long-term outlook.
Well, here's where things get interesting. Nike's direct sales, the ones that come from their own website and stores, those took a significant hit, down 14% on a currency-neutral basis. Now, this isn't just about fewer people buying sneakers online. This could actually point to something much bigger.
Like what?
A shift in how consumers are interacting with brands, especially online.
Hold on, back up for a second. Currency-neutral basis. For those of us who haven't quite mastered the language of Wall Street yet, what does that even mean?
Yeah, no, it's a good question. Currency neutral basis means we're basically stripping out the effects of currency fluctuations. So imagine, Nike selling shoes in Europe. If the euro weakens against the dollar, their revenue in dollars will appear lower, even if they actually sold the same number of shoes. So a currency neutral comparison helps us isolate the real performance of the business, regardless of what's happening in the currency markets.
Gotcha. So we're looking at the underlying business performance, not just numbers skewed by, currency swings.
Yeah.
Makes sense. So back to those direct sales, you were saying this could be about more than just, a dip in online shopping.
Exactly. One theory, and this is something highlighted by Simply Wallsaint, is that the rise of global direct-to-consumer brands might be putting pressure on Nike's premium pricing strategy.
Makes sense.
Think about it. You're a young athlete. You're looking for a new pair of running shoes. You see a similar product online for a significantly lower price. You know that iconic swoosh might not be enough to justify that price difference anymore.
So even with their massive brand recognition, Nike's not immune to the competitive pressures of the online marketplace. Is this a sign that maybe brand loyalty is weakening among younger consumers?
It's definitely a question worth exploring. Now, while their direct sales channel struggled wholesale revenue, which comes from sales through other retailers, that was only down 4%. So people are still buying those Nike shoes and clothes from their favorite stores.
Okay, so mixed signals there. Demand for Nike products is still there, but their direct-to-consumer strategy might need some, fine-tuning. What does all this mean for the stock, which, let's not forget, took a 13% tumble in Q2?
Yeah, stock prices can be volatile, especially after an earnings report that doesn't quite meet expectations. The question is this drop an overreaction, or is it a justified response to Nike's current performance?
Right, because a dip in stock price doesn't always mean a company is doomed. Sometimes it's an opportunity for savvy investors to swoop in and grab a bargain.
Absolutely, and that's why we got to dig a little deeper. Simply Wallsaint has an interesting analyst consensus narrative that might shed some light on this. It's titled Leadership Changes and New Product Focus Will Revitalize Brand Momentum.
Ooh, leadership changes. Are we talking new CEO, new direction? Fill us in.
We are. Nike has a brand new CEO, Elliott Hill, who took the reins in October 2024, and he's already making waves. In Nike's Q2 press release, he said, "Our clear priority is to return sport to the center of everything we do."
Return sport to the center. It sounds like he's laying down the law, getting back to basics. Is that a good thing?
Yeah.
Especially after these less than stellar earnings?
It could be. A new CEO often signals a change in strategy, a fresh perspective on how to tackle challenges and pursue new opportunities. Hill seems to be emphasizing a refocus on what made Nike a global powerhouse in the first place, that connection to athletes and that commitment to innovation in sports performance.
So a back-to-basics approach, a new CEO, a stock price that's taken a bit of a hit. Starting to sound like we got a classic turnaround story brewing here.
Maybe so. But before we jump to conclusions, let's take a closer look at Hill's vision and what it might mean for Nike's future, both in terms of their business performance and, of course, the all-important stock price.
Welcome back to our deep dive into Nike's Q2 2025 earnings. We've set the stage, we've got the context. Now I think it's time to zoom in on, one of the most interesting aspects of a global brand like Nike.
Oh, I think I know where you're going with this. Their performance in different regions around the world. I mean, come on, that swoosh, it's everywhere. But are all those shoes translating into sales growth in every corner of the globe?
That is exactly what we are about to uncover. And let me tell you, the regional picture is a fascinating one. Some, surprises along the way. But first, let's start with North America, Nike's home turf. Their Q2 revenue in this region came in at $5.18 billion. That's an 8% drop compared to the same period last year.
So even on their home ground, Nike's feeling the heat. We talked earlier about, those broader economic factors potentially impacting consumer spending. Is that what's driving this decline in North America? It's definitely a major factor. Inflation has been hitting consumers pretty hard. Concerns about potential recession have a lot of people tightening their belts, and that means discretionary spending, the kind that goes towards things like a new pair of sneakers, that definitely takes a hit.
Yeah, it makes sense. When you're worried about, making ends meet, a new pair of Nikes might not be at the top of the shopping list. But within North America, were there any bright spots? Any hints of resilience or, potential shifts in consumer behavior?
There were actually. While footwear sales were down 14%, apparel actually saw a slight increase, up 1%. This could indicate a shift in consumer preferences, perhaps towards, more versatile and comfortable clothing.
Interesting. So maybe those comfy sweats and hoodies are winning out over the latest sneaker drops. Makes you wonder if this trend will continue or if it's just a blip on the radar.
Yeah, definitely something to keep an eye on. But let's shift gears now and see how Nike is faring across the pond in Europe, the Middle East, and Africa. Their Q2 revenue in that region totaled $3.3 billion, a 7% decrease compared to last year.
Okay, so another region with declining revenue. Is it safe to assume those same global economic headwinds are impacting this region as well?
Absolutely. Europe in particular has been dealing with its own set of challenges, high energy costs, economic uncertainty, definitely taking a toll on consumer confidence and spending. And let's not forget the geopolitical situation, which can also, impact consumer behavior in unpredictable ways.
Yeah, it's a reminder that global brands like Nike, they're operating in a complex and interconnected world. Their performance is tied not only to, their products and their marketing, but also to those larger forces that shape the global economy. So far, we've seen declines in both North America and Europe and the Middle East and Africa. Now it's time to turn our attention to the powerhouse of Asia, specifically Greater China. What's the story there?
China, the market everyone's watching. Nike's Q2 revenue in Greater China came in at $1.71 billion, down 8% year over year. Not exactly the, explosive growth some might have expected.
So even China's massive consumer market couldn't shield Nike from a revenue dip. What factors are at play here? Is it just the slowing economic growth we've been hearing about?
Well, while China's economic slowdown is definitely a factor, there's more to the story. Remember those geopolitical controversies we mentioned earlier? Well, those have had a real impact on Nike in China. Consumer boycotts and negative sentiment surrounding certain issues have definitely taken a toll. It's a reminder that brand image and social responsibility are increasingly important, especially in a market as sensitive and dynamic as China.
Yeah, it's a tough lesson for any global brand. You can't just assume that your success will automatically translate across different cultures and political landscapes. You have to be aware of those sensitivities and navigate them very carefully.
Exactly. And for Nike, rebuilding trust and regaining that positive brand image in China, that's going to be crucial for their long-term success in that market. But hey, let's not dwell on the negative. There's one more region to explore, and it actually offers a glimmer of hope. Amidst all these revenue declines, I'm talking about the Asia Pacific and Latin America region.
Wait, a glimmer of hope. Tell me more.
This region was actually the bright spot for Nike in Q2. Their revenue came in at $1.74 billion, a much smaller dip of just 3% compared to last year.
A smaller decline. That's practically a victory parade compared to what we've seen elsewhere. What's working for Nike in this region?
Well, a few factors are driving this relative success. First, many countries in the Asia-Pacific region have experienced robust economic growth, which translates into, greater consumer spending power.
So a rising tide lifts all boats, including those carrying the swoosh.
Precisely. But there's more to it than just a strong economy. The Asia-Pacific region is also home to a growing middle class. With an increasing appetite for, Western brands like Nike, they see those iconic sneakers and clothes as symbols of aspiration and success.
It's fascinating how a brand can hold such different meanings and associations in different parts of the world.
It is, and Nike has been very strategic in adapting its marketing and product offerings to resonate with these aspirations. They understand the nuances of the local market, and they're catering to those specific tastes and preferences. It's a lesson in the importance of global localization, so to speak.
So while Nike's Q2 earnings weren't exactly a slam dunk, this performance in the Asia-Pacific and Latin America region shows they still have pockets of strength and growth potential.
Exactly. It's a reminder that a global brand like Nike is more than just a single entity. It's a collection of interconnected businesses, each operating within its own unique market, with its own set of challenges and opportunities.
Okay, we've journeyed across the globe, and we've seen a real mixed bag of results. But remember, we're not just here to report the numbers. We're here to figure out what it all means for you, our savvy young investors.
Right. And that brings us to the big question. Is Nike a good investment right now? We've got declining revenue in some regions, a new CEO with a fresh vision, a strong dividend track record, mixed signals from different parts of the world.
Talk about a cliffhanger. But don't worry, folks, we'll tackle that big question head-on when we return for the final part of this deep dive. All right, investors, it's the moment of truth. We've analyzed Nike's Q2 earnings, we've explored their global performance, and now it's, decision time.
That's right. We've gathered all the intel, and now the question on everyone's mind. Is Nike stock a just buy it opportunity or more of a just wait and see situation?
So let's break it down. What are the strongest arguments for investing in Nike right now? What's got those bulls charging ahead?
Well, even with the recent dip, Nike's brand recognition is undeniable. I mean, that swoosh. That swoosh is practically a universal language. It's a symbol of athletic excellence and cool factor that resonates globally.
Yeah, you're right. That swoosh has serious power. You see it everywhere, from
Yeah.
professional athletes to, weekend warriors, bustling cities to remote villages. It's a brand that transcends borders and cultures.
Exactly. And that kind of global brand power is a huge asset. It gives Nike a competitive edge that's, really hard to replicate. Plus, we've got a new CEO, Elliott Hill, who seems to be steering them back to their core strengths, sport and innovation.
Yeah, it's like they're hitting the reset button, going back to what made them great in the first place. Is that a sign of strength or a sign that they've kind of lost their way?
It could be both. It's a recognition that they need to refocus to reclaim their dominance in the athletic wear market. And let's not forget about those consistent dividend payouts. 23 years of increases shows their commitment to returning value to shareholders.
Okay, so we've got a powerful brand, a new CEO with a back-to-basics approach, and those steady dividends. But what about the other side of the coin? What are the risks investors need to consider before jumping on the Nike bandwagon?
Well, the most obvious risk is that declining revenue. We've seen it across multiple regions, and those economic headwinds we discussed, they aren't going away overnight. It could take time for consumer spending to rebound, and that means continued pressure on Nike's sales, at least in the short term.
So patience is key. No expecting a sudden turnaround.
Yeah, turnarounds rarely happen overnight. They require strategic adjustments, operational improvements, and often a bit of luck. And then there's the competitive landscape. The athletic wear market is more crowded than ever, with established players like Adidas and a whole slew of up-and-coming brands, all vying for market share.
So it's not just about weathering the economic storm. It's about fending off rivals in an increasingly competitive market.
Exactly. And let's not forget those China-specific challenges. Rebuilding trust and navigating the complexities of that market, that'll be crucial for Nike's long-term success in that region.
All right, so we've got potential rewards and potential risks. It's a classic investment dilemma, but let's cut to the chase. Based on everything we've discussed, what's the verdict? Is Nike a buy, or should investors hold off for now?
Oh, if only were that simple. Remember those Simply Wallsaint articles we mentioned? They offer a range of perspectives that highlight the, complexities of this decision. One article suggests there's significant upside potential for Nike's stock. Another advises caution, recommending investors wait for signs of improvement before jumping in. And then there's the one that argues the current dip presents a golden buying opportunity.
3 different perspectives, all based on analysis of the same data. It's enough to make your head spin. How can a young investor cut through all the noise and make a confident decision?
Here's the key. Don't blindly follow anyone's opinion, even if they have fancy credentials or a track record of success. Look at their reasoning, consider their biases, and weigh their arguments against your own research and risk tolerance.
So it all boils down to doing your homework, being critical of the information you encounter, and making a decision that aligns with your investment goals and your comfort level with risk.
Absolutely. And that's why we do these deep dives. We don't claim to have all the answers or a crystal ball that predicts the future of the stock market. Our goal is to empower you with knowledge and insights so you can make informed decisions and navigate the exciting world of investing with confidence.
Beautifully said. So to our listeners out there, as you ponder whether to add Nike to your portfolio, remember there's no right or wrong answer, only informed choices. Consider your investment goals, your timeline, your risk tolerance, and most importantly, do your own research.
And don't forget diversification. As tempting as it might be to bet big on a brand you love, spreading your investments across different asset classes and sectors can help mitigate risk and potentially boost your returns over time.
That's right, folks. Don't put all your eggs in one basket, no matter how shiny that swoosh might be. Well, that wraps up our deep dive into Nike's Q2 earnings. We hope you found it insightful, thought-provoking, and maybe even a little bit entertaining.
And as always, we encourage you to keep learning, keep exploring, and most importantly, keep investing in yourself and your future.
Until next time, stay curious, stay informed,